Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GREENTOWN China interim report. GREENTOWN China Holdings Limited offers a diverse range of businesses and services, including residential property development and sales investment and asset management, project management technology research and development design and decoration services education, project construction and operation hotel operations property investment and rental construction material sales. GREENTOWN China Holdings Limited stock price increase. A year of resilience and growth over the past year, GREENTOWN China Holdings Limited, HK 390, has seen its stock price rise by a significant 43.31%. This substantial growth can be attributed to several key factors that have contributed to the company's robust performance. One major contributor is the company's strong sales performance and market positioning. Despite the challenging market conditions, GREENTOWN China reported impressive sales figures, with 52.5 billion yuan in sales in the first 4 months of 2024, surpassing Longfor as the largest purely private company by sales. The company's resilience was also evident in its April 2024 sales, which declined by only 26% year-on-year. In addition to strong sales performance, GREENTOWN China has also seen rising revenue and profit. Its revenue increased from 100.2 billion yuan in 2021 to 131.4 billion yuan in 2023, while its profit rose by 13% in 2023 to 3.12 billion yuan. The company's healthier financial position has also contributed to investor confidence. With a manageable net debt-to-asset ratio of 63.8%, GREENTOWN China has demonstrated financial prudence and stability. This is particularly notable given the lessons learned from previous financial challenges. Looking ahead, the company continues to report strong sales figures, with unaudited results for August 2025 showing RMB 10.6 billion in monthly sales for self-investment projects. As a result of these positive news and indicators, investors have shown confidence in GREENTOWN China's stock price, driving it up by 43.31% over the past year. The primary drivers of revenue growth or decline for the company can be summarized as follows. Revenue growth drivers. 1. Contracted sales and new saleable value. 2. Increased market share and steady progress in sales rankings. 3. New investments with sufficient quantity and high quality. 4. Improved operational quality, customer satisfaction, and expansion into new cities. 5. High-quality structural investment opportunities and reduced construction costs. Revenue decline drivers. 1. Industry scale contraction and decreased commercial property sales area and sales amount. 2. Investment in real estate development decreased further compared to last year. 3. Prices of new and second-hand housing continued to fall, leading to uneven recognition and impairment loss on relevant assets. 4. Decline in scale of recognized property sales and revenue from sales of properties. Net income decreased by 21.4%, resulting in a loss of RMB 170 million, compared to the previous year's loss of RMB 110 million. This decline can be attributed to various factors, including increased land appreciation tax as a percentage of revenue, which rose from 0.6% to 1.3%. Despite this, profit margins showed some improvement, with gross profit margin increasing from 13.1% to 13.4%, and property sales gross profit margin rising from 11.7% to 12.7%. However, the overall net income decrease suggests that these gains were not enough to offset other losses. The company's financial performance indicates mixed results regarding its operating cash flow. While there are instances where the company generates positive operating cash flow, such as on pages 57, 74, and 94, other sections of the report reveal negative or decreasing operating cash flows. This inconsistency suggests that the company is not consistently generating positive operating cash flow across all periods. The company's debt level and interest expenses have undergone significant changes over the past period. While there are varying reports of increases and decreases, a general trend can be observed. Initially, total borrowing saw a 4.2% increase from RM 137,187 million to RM 143,027 million, page 30. However, this was followed by a decrease in debt level by RM 154,315, 11.9%, on page 77. Furthermore, non-current liabilities increased by 11.8% on page 59. Regarding interest expenses, there is a consistent decline across various reports. Interest expenses decreased by RMB 745 million from RMB 3.698 billion to RMB 0.953 billion on page 28, and by RMB 744,915, 20.1%, on page 77. Additionally, interest expenses saw a significant decrease of 51.73% on page 103. It is worth noting that the financial liabilities at fair value through profit or loss have increased due to currency swap contracts on page 109. Overall, while there are some discrepancies in the reports, it appears that the company's debt level has seen fluctuations, but interest expenses have generally decreased over time. The company's financial performance reveals a mixed picture across different segments. On the positive side, property development, hotel operations, project management, and others have shown strong revenue growth, with notable figures including $1,640,031 in revenue for property development and project management, and $3,539,235 in revenue for others. In contrast, the property investment segment has underperformed, reporting a significant loss of -$138,836 in revenue and -$60,812 in segment results. Management's outlook on GREENTOWN China's strategy. Despite industry challenges, GREENTOWN China remains committed to its core concept of meticulous cultivation for survival and aims to maintain growth momentum. The company prioritizes key tasks such as tackling inventory challenges, enhancing revenue, reducing costs, and improving efficiency. Its strategy focuses on destocking, accelerating cash collection, strengthening sell-through capabilities, and maintaining market leadership. By adhering to its established concept and addressing current challenges, GREENTOWN China seeks to continue leading the industry while achieving steady progress in sales rankings. There were no notable acquisitions or divestitures in this period, indicating a stable financial landscape with minimal changes to the company's assets and investments. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as indicated on pages 26 and 81 of the report. Secondly, the company has also implemented share buybacks, purchasing back shares from the market, as noted on page 61. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Inventory has been mounting, with a significant destocking of RMB 19 billion from 2021 and prior years. This is attributed to slow-moving inventory, which poses pressure on the industry. Supply chain disruptions also loom large as the industry scale continues to shrink. Revenue from property sales decreased by 23.3% year-over-year, mainly due to a decline in recognized property sales. The area of properties with recognized revenue has also seen a significant drop of 22.7% year-over-year. These indicators suggest that supply chain disruptions are affecting the industry's performance. That concludes the financial summary for GREENTOWN China. Feel free to comment below, and I will be happy to answer them when possible.